Okay, what's up, guys? Today I'm going to be sharing a scalping strategy with you all. One that I use very often, one that's very profitable and consistent in the markets. You can use these setups in crypto, forex, stock market, and you'll find that they work very well. Okay, so the strategy is based off of supply and demand, order blocks. Um, all you are looking for is a 1% move in price action and done. Okay, so 1% move in price and you're done. That's it. That's all. Sometimes these zones will give 1 to 5% moves plus more, as you'll see in the examples when we get into the chart, and they'll also give multiple trades. So generally I will close out at 1% profit. I place my stop loss below the wick that found support if I want a long, right? And I would place my stop loss above the wick that found resistance if I would like to short. My confirmation for entry is based on the 15-minute candle close. So I want to see the 15-minute candle approaching my zone. I want to see the reaction of that candle. And if I get the reaction that I like, then I take the trade upon the candle's close. Okay. So, and I'll get more into that when we look at the chart. So I look for impulses in price action that are showing me supply and demand. And if I see a 15-minute, 1 hour, 4 hour order block at the zone, it gives me more confidence to trade off the zone. Okay. I mark out my zones with a rectangle, which is just this tool right here. Rectangle, you can find it right over here in your left pane of your trading view screen. You just open it up and you'll see the rectangle right there. Put a star on it, add it to your toolbar. That's what I use, and that's what you can use as well to find these zones, to mark them out. Okay. So after I mark out the zone with a rectangle, I just I'm patiently waiting, and when price comes back to my zone, I wait for confirmation and I place my trade. Simple as that. Okay. Order blocks are not required. It just adds more confluence, and it gives more confidence in that area that you have your zone plotted out in. Okay, so there's a key point. I use the 1 hour and the 4 hour time frame to identify these zones using Heikin-Ashi candles. If you don't know what Heikin-Ashi candles are or where they are, you can come up here to where your candles are, where your candle is, and then if you don't have Heikin-Ashi added, or if you don't know what it is, just hit the down arrow. It'll pop up in this list right here of candles, and there it is right there, Heikin-Ashi. Put a star on it, then you'll have it here to get quick access when you want to plot zones. Okay, so let me repeat what I had just read about that. So I used the 1 hour and 4 hour time frame to identify these zones using Heikin-Ashi candles. Okay, so here's some rules for you and some requirements. With this strategy, you will need a rectangle tool, Heikin-Ashi candles to mark zones. This will also help to eliminate poor psychology when you're in the trade, and I'll show you why. Regular candlesticks on the 15-minute time frame to find your entry and place your stop loss. You need patience and you need discipline. If you can follow these simple rules, then you can be successful using this strategy. So let me go over to the charts. I'll show you how I mark them out. Okay, so here we are at the chart where most people are just going to have the regular candlesticks. Okay, what you can see is I already pre-marked some zones here, but remember, I do not mark them with candlesticks. Okay, I repeat, I do not mark my zones with candlesticks. What I will do to mark my zones is, now that I'm on the 4 hour time frame, I will switch over to my Heikin-Ashi candles, just like this. And now you'll see that they look very different. You just see red and green in a consistent fluid motion. Okay, and why is this? It's because Heikin-Ashi candles are based off of volume and trend. Okay, so I do not use Heikin-Ashi candles to enter into a trade. I repeat, I do not use Heikin-Ashi candles to enter into a trade. I do not use them for stop losses on a trade because they are not going to be as accurate as your candlesticks. What you're going to notice is, if you watch the Heikin-Ashi candles, every new candle that opens, it opens up at 50% of the previous candle. Okay, the average volume. Okay, so it just opens up at the average volume of the previous candle. Okay, guys, so that's important to remember. Heikin-Ashi candlesticks are just for marking your zones, as well as when you are already in your trade, to help you eliminate any poor psychology habits that you may have. Okay, so let's start by marking our first zone. So what do I look for when I want to find these zones, excuse me, kill my throat really quick, get some water. Okay, so what I look for is a red candle followed by, at minimum, okay, at minimum 3 green candles. Okay, if I'm looking for a demand zone, I want to see a red candle followed by 3 green candles showing an impulse and price action. Okay, now if I'm looking for supply, what I want to see is a green candle followed by a minimum of 3 candles. Now in this case, these Heikin-Ashi candles are fairly large, so I suppose you could just, class this as 3, even though it's not. But when they're this large, you could suspect that you go into a 1 hour time frame like this, you're going to see 3. Okay, you see more than 3 there. All right, so I would mark that zone out as supply by just grabbing my rectangle tool. And generally, I don't like to pull them from the red candles, I'm going to be honest, but sometimes you'll get away with it. Okay, and if it's going to work, then it's going to work. But as a general rule, I typically don't take the red candles. I like to see, if I'm looking for a supply area, let me show you an example. I would probably, most likely, I would be looking for something like this, where you have the green candle, and then you have your rejection down, 1, 2, 3 candles down. Okay, and so I would only take it from the wick. I only take them from the wick. Okay, and I patiently wait. After I see this impulse down, I see my 1, 2, 3 candles. Okay, I mark out the zone immediately, and I wait for price to come back to my level. Okay, and then I go to the 15-minute time frame, 15 minutes, and I wait for my reaction, and I take the trade. Okay, 1% moves only. Now, the better you get at this, you can increase your take profit. I mean, it's completely up to you. I can't tell you guys how to trade, but per the strategy, we're just looking for 1% moves. Okay, so when I want to look for demand, one thing you got to be aware of is if you see a whole bunch of small wicks like this, I'm not going to pull it from there. I'm just not, because the chances are, we have to also think logically that price is going to come, and most likely it's going to take these lows. So what I would do rather is this. Whenever you have this type of situation where the wick is long, but then you have these small ones next to it, take it from the low of the wick to the last candle before the impulse, which would be right there at the bottom of that candle where it closed, and then use that zone right there. All right, so let's continue. You'll see that I already have some marked out here, right over here. Okay, and also over here. And so let's look at this candle really quick right here. So as I said, small candles like this, guys, I just leave them alone. I don't bother with them. Now, if you can find a trade off of that, then good on you. But I personally, I don't like to take small ones like this. I want to see a nice wick. Okay, and what I do is I take the rectangle just from the wick. So I see my green candle followed by 1, 2, 3, 4. So it meets that 3 bar minimum. And I take my zone tool, my rectangle, and I mark the wick. All right, and then I slide it over. And you got to be patient. All right, just be patient. There's nothing wrong with waiting. And one thing that you'll notice is, even though this is way up here and price came all the way down, you'll notice that when price comes back around, it's still well respected. Okay, you'll find that often. So just because a zone wasn't hit when you wanted it to be or when you expected it to be, doesn't mean you have to delete it, because chances are when it comes back around to get tested, you're going to get a reaction off of it. Okay, so here I see a red candle followed by 1, 2, 3 green candles. I mark my zone, I wait for price to come back around, and as you can see here, you got 1 reaction, and then price came up again, came back down to the zone, you got 2 reactions, price went back up again, came back into the zone, you had 3 reactions, you had 3 trades off of this 1 demand zone. Okay. So now, in this case, this wick right here, this one right here, I see a red candle followed by green candles. Now this would be an example to just show you guys that it's not always gonna give you exactly what you want, but as you practice and apply this tool, you'll develop an eye for it on where the best areas are to take your trade. This one gave you your 1%, so that was a trade right there. Okay, you have to remember though, what's really important is the context of the market. You have to understand the structure of the market. You have to have a good sense and idea of what's going on in the market. Are we coming off of are we looking for 5 waves down? Is 5 waves down complete? Are we expecting an ABC down and then a move back up? Like, well, what's the context? What's the current state of the market? Are we ranging? Are we trending? You don't just mark out these zones and say, right then, there's a zone I'm going to buy, or there's a zone I'm going to sell. You have to understand that every single one of these that you see they're not always going to give you that reaction that you're looking for. Now, most of the time they will, but just not always. Okay, so just make sure that you're also understanding the context of the market. So here we go with a couple more examples on how I would mark out my zones. I see a red candle followed by green candles. I place my rectangle tool on the wick and I slide it over. What you'll see is price gave the reaction once, twice, 3 times, 4 times. Okay, there's 1%. In here, that was about 0.8%. In here, you had about 2.8%. And off of this one, you could have had your 1%, but you would have been kicking yourself in the butt because price exploded. Okay, so let's go to this one. So like I had said, whenever you see a long wick and then you have these other candles next to it like this, I don't take the small candle. Okay, I don't take the small candle. I always prefer to take the longer one. But in this case, how I would pull my rectangle is I would take it from the low. I would take it just like this. I'll show you. Take it from the low of this wick and take it right up to the next candle right there, right where that candle closed, and then just slide that one over, and then you can see it gave you a reaction. One thing to keep in mind is that the first touch is most of the time going to be the best touch. That one was 9.4%. Came back again and gave you 0.64%. Okay, so guys, you have to remember this is a scalping strategy. Okay, scalping strategy. So with this one, there was another zone right here, and I encourage you to go to your charts and mark out these zones, see how well respected they are, and ask yourself, how can I implement this into my trading strategy? And you'll find that you will see them everywhere. Okay, this one was 0.9%. So the hard rule is this: 1% moves. Okay, a lot of times it can give you more than 1%, but as a hard general rule, you are looking for 1%. All right. So this would be kind of the same case, but even though these small candles are here, the bodies they're above this close. So I just take this wick right here, and I would be expecting a reaction off of this zone when price comes back. So what you could do is you can mark out all the zones that you are speculating on as to when price retraces back down to them. You're thinking they're going to get a reaction. Mark them out anyway. Put them in a folder over here in your object tree. Put them in a little folder like this. Click them all. Put it in a folder. Say zones or something like this, right? Zones, and go like that. And so when price is getting ready to go and it's not there yet, you could just hide them, but you know that they're there. And like this. Sorry, I already had the folder. Like this, and you can just hide them all. Okay, so you don't have to leave them on your chart, but just set an alert. One of these, come over here, set an alert, something like that. So when price comes to your level, you're ready and waiting. Give it a label. Say what it is. You have a scalp zone, and so you're well prepared when price revisits your zone. Okay. So for now, I will just be aware that this one is down here. Okay. Now, this rise is a very clear impulsive rise. Okay, so we have our red candle followed by our green candles. Now, in this case, I would just honestly take it just like this. I wouldn't bother myself with the low because I would rather take it closer to where the impulse begun, since this one had spaced out. But if you wanted to, you could also take it right there. Okay, there's nothing wrong with that. It's up to you. Or if you also wanted to, you could do it just like this. Take it from the low wick to that one right there, to where this one closed right there, from this wick to this close, and just slide it across. And same thing applies. You're just waiting for a price to come back to your zone, checking if you get a reaction on the 15-minute time frame, and you are taking your trade. Okay, so here's another one here that I would mark out. take the wick right here, slide it across, be patient, and wait for price to come to your level. All right, so let's get into, so that's how I marked them out. Okay, now let's get into, let me see something really quick. Okay, so let's get into how I would enter into the trade. Now, again, I would encourage you guys to just go to your own charts, turn on your Heikin-Ashi candles, watch this video, get an understanding of how I mark it out, and then go to your charts and apply it for yourselves and give it a run. All right. So down to the 1 hour. Let's go to the 1 hour really quick. Here's a zone that I would mark right here. Although this wick is small, I would take this anyway. Let's see if this is an order block as well. Okay, so there's a 1 hour order block right there, and there's a 4 hour order block right there. So I like that zone. I would take that, because if price doesn't respect this, then I expect it to take these highs out. Okay, so therefore I see my what I want to see. I see my requirements, which is a green candle. I'm looking for supply, so a green candle followed by red candles. There's 3 down and it gives an extra one, so therefore that would be a zone. All right, now that would be supply. Now for demand, I'd be looking right down here. There's a zone, there's the candles, 1, 2, 3, and I would mark this out as a zone. Now I could say, hey, is there an order block? And what I could see is there's a 4 hour order block right here, and on the 1 hour time frame, there is a small order block right here for the 1 hour time frame. So those would be valid as well. Back to Heikin-Ashi, because we only use Heikin-Ashi to mark out these zones. So in a sense, it's very similar to order blocks, isn't it? But it just incorporates supply and demand. Okay, so now I'll show you how I enter into these trades. So when I'm wanting to enter into the trade, I have my zones marked out already, so then I switch back to my candlesticks. Now, let's start with the top. So what you can see is price had come in to this level, right? Price, you marked out your zone, you waited patiently for price to come back up. Give me a second here. Let me just go back here for a second. Okay. Just making sure I marked it correctly. So price comes back into the zone after you marked out your supply, right? It comes in, and now if you're wanting to get this in a very clean way, what you want to wait for, guys, is wait for the reaction like this, where price comes out on the 15-minute time frame and just gives that nice perfect test. Now if you wanted to catch it while it's in the zone, wait for this pullback. Okay, once you see this close, once you see this candle close right here, take your long, place your stop loss, oops, wrong one. Place your stop loss, take your short, place your stop loss just above the wick, and you're targeting for 1%. All right, this one gave 2.5%, but really you're targeting 1%, and that's it, you're done, that's all. Okay. What you'll notice though is a lot of times you'll get clean back tests, so I wouldn't consider this clean, but nonetheless you could have taken it after seeing the reaction, and this would be a reaction. Price comes into the level and gets a rejection, and you see the wick is the result. That's a reaction. This candle, price came up, got pushed down, closed with a wick, that's a reaction. Okay, when you're seeing these wicks, that's a reaction. So when price is in the zone and the candle is still active, you're not taking the trade. You need to be patient. You were patient enough to wait for price to come back around, so also be patient enough to wait for the candle to close. Okay, now when the candle closed, you could have taken the trade in any one of these candles, 1, 2, and 3, or you could have just been patient and waited to get the clean back test. This was not clean, this was not clean, this was not clean, this was not very clean, it was clean but not very clean, this was not clean, now this one was clean right here. So you need to wait to see your nice reaction. So one thing to take note of is market structure, right? In this case, this is why I say this isn't just put a zone on my chart and take the trade. This is the case of what's the market structure. So what happened is we had our high, right? We had our high, we had our low, then we have a lower high, and then we make a low, we put in another lower high, higher low, lower high. So what you can tell is we're into a resistance zone, right? If we're into a resistance zone and we're not making higher highs after this high, we're making lower high, lower high, okay, you're at resistance, so you're thinking, you should be thinking sell, short, right? Now you could have taken it off of 1, 2, 3, or off of 1, 2, 3, 4. That one's up to you. How I would have taken it personally, I would have waited for this candle to close, and right there, that is my trade. Okay, I put my stop loss, I get my 1%, and that's it. That's all. This doesn't bother me. Okay, it doesn't bother me. This right here, it doesn't bother me. I see what I want to see. That's my setup. That's my system. That's my scalping strategy. And so I follow it, okay, and I take the trade. And you can see you wouldn't have been stopped out. So, really quick. So this didn't just give one trade at 1%, but it came up again. And after you've seen this close right there, stop loss just above the high, you're looking for your 1%, you would have gotten it. So you had one trade at 1% here. You would have had your 1%. Now again, this gave more than 1%, but you would have had your 1% in there, and then you would have been done. Okay, you could see price come back up into this area, you get your reaction, take your trade, you got your another 1%, you're done. Price comes up again, you get another 1%, you see the reaction right at the candle close, you take your trade, stop loss above the wick, you get another 1%, you're done. Okay, in this case it was just shy of 1%, so it was 0.9%, but nonetheless rounded up, that's 1%. So you got 3 so far. Then price comes back up again into the zone, take your trade, stop loss above the wick, you're targeting for 1%. This one was at 0.69%. Now this one, you see a reaction, you're still putting in lower highs, right? You see a reaction, take your trade, stop loss above the wick, you're looking for 1%. Okay, this one gave more, and this one gave 4.5%. But hard rule, just take your 1%, be happy, because you won a trade, and you would have had 1, 2, 3, 4, 5 trades right there in a time span of basically a day, 19 hours. You would have had 4 trades right there. Okay, now back to our demand zone below us. So this was supply above, here's demand below. So now we have to remember we're taking this off of the 4-hour time frame using Heikin-Ashi candles. So this is not what we're looking for. We're not looking for this right here. Okay, that's not what we're looking for. If we just go back really quick, Heikin-Ashi candles, 4-hour time frame. These don't count. Okay, we're looking for this one, and we're looking for this one. So let's go back to our 15-minute time frame. Now, what we can see is here was our touch. This trade we probably would have lost. Okay, you have to understand you're not going to win every single one of these, but you're going to win more than not, especially as you develop an eye for it. So you would have been paid out 0.98%. So you in all honesty, you could have won, but you're just shy of 1%. That's one trade. Price comes back down again. When I see this, guys, I don't take these ones. Okay, if price wants to do this nonsense, I'm just gonna let it do that nonsense. I need to see the wicks. Okay, that is a requirement. That is a rule. I need to see the wicks. Okay, so let price do its thing. Come back and back test. There's the wick right there. So I see that wick. I'm gonna take my long trade. Stop loss just below the wick. And I'm looking for what? 1%. There it is. Okay. Now, you can, like I said, you can sometimes use these zones because they'll get multiple touches and they'll be respected. Here's the second one. This is a perfect one. This one's very, very clean. So after seeing this, I see the candle close, place my trade, stop loss below the wick. And what am I looking for? Just 1%. That's it. Just 1%. Now this obviously would have gave you more, but you want to stick to the rules. A hard rule, simple rule, 1%. Okay. Alright, so that would have been another trade. And so I hope that you can just kind of see how this is being respected, how this is consistent, and I have no doubt you guys will be able to find this on your chart, alright, with ease. So let's go to some more examples and then we will wrap this up. It's pretty simple, guys. I'm trying to tell you, it's very, very simple. It doesn't need to be complicated, and you know, if you do this consistently, you will see results. And as you apply this on your chart more and more, you will get better at this. So in this one, You'll get better at identifying this, I should say. In this one here, you can see here price came back down to our zone. We have our reaction, our 15-minute candle. We take our long, stop loss just below the wick. We're looking for 1%. So this one probably would have been a loser, right? And that's okay. Gave 0.3%, that's fine. Like I said, you're not going to win every single one of these. But then it gave you another opportunity. There's your reaction, stop loss just below the wick, take your trade, and you're looking for 1%. This one was 0.9, and that's fine as well. Now you can base your take profits however you want to take your, do your take profits. I can't really tell you how to do that, but generally what you're looking for is your 1% move, all right? So had some more over here. And again, I encourage you, go to your chart and mark this out for yourself, and you will be blown away with how simple this strategy is and how often you find them, okay? So here is an example of supply. Price is coming up, approaching supply. We see the candle come in, we see the 15-minute candle reject. There's our reaction right there. Take the trade, stop loss above the wick, and you're looking for 1%. Now this would have gave you more than 1%, but hard rule 1%. This would actually give you 3.7. But hard rule, 1%, right? There's another one. And then the price came up again to the level, to the zone, and it gave you the same thing. You see your reaction, your rejection. Take your short, stop loss above the, just above the wick. Looking for 1%. Now this one, same thing. This one would have gave you pretty much 5%, rounded up, 4.98, 5%. Just say that. But yeah, 1%. That's all you're looking for. Okay. And you can catch these a lot. Like they happen all the time. And the thing is when you see them, take them. All right. Don't be scared. Take the trade. Don't hesitate. And if you have doubts, then open up your paper trading account and paper trade it until you feel confident enough to place your entries. Okay. That would be my advice to you. So I'm not quite sure if we covered this one yet. I don't think we have. Let's just take a look. Okay, I do believe we have. So now, wait. No, I don't think we have this. So okay, we'll go over this one. Here we have. We'll end with this one, and then we will wrap it on up. So here we have a 15-minute candle. There's our reaction. I see my reaction. It comes into my zone. I enter at the close, stop loss below the wick, and I'm targeting for 1%. Okay, simple as that. Now it would have paid out a lot more at 3.7%, but hard rule, again, hard rule, 1% moves. Okay, now upon price coming back down to it, we see here that we had another reaction, and in this case you can decide whether or not you want to take this long wick or not. That's completely up to you. Some of these aren't going to be as clean as you would like them to be. A lot of them will be, but let's say you took this long wick, stop loss below the wick, you're still targeting your 1%, which you would have got. Okay, 1%. Now what you can see is, it obviously would have gave you a lot more, 6.9, but again, hard rule, 1%. And most of the time you'll get 1% out of these. You take your trade, you will get your 1%. Just take your trade, do not be scared. You see price respecting the zone, it's not taking lows. Don't be scared, take the trade. Okay. We covered those, maybe we didn't. Okay, so on this one, we see that the 15-minute candles, they were coming up. But once we see this rejection, there's a reaction. So once I see that reaction, I take my short, stop loss just above the high I'm only targeting for 1%. So I mean, it's mind-blowing just how often, you know, you're looking for 1% moves. Maybe you have a hard time finding them. Well, here you go. Here's a strategy for you right here. 1% moves all day. So again, I see price coming up. I see this wick rejection, right? I see this rejection again. Okay, I'm getting in the trade, and I'm looking for simply 1%. Okay, that's it. Now this would have gave you more, but what you can see in these examples, a lot of these trades would have given you more. Okay, and I think you can see that now. Again, this one, I see the reaction. I take my long upon the close, stop loss just at the low. I am looking for 1%, which you would have had perfectly. Now again, you'll notice a lot of these give more than 1%, but I just have to keep repeating it, 1%, okay? This is about consistency. This is, again, the scalping strategy. Now, if you guys want to tailor this to your tools that you use and how you apply, you know, certain things to the markets, maybe you have your own strategy, you know, take this strategy and make it your own, guys. Seriously, take it, make it your own, modify it, do whatever you think you need to do. Just remember the rules. You're using Heikin-Ashi candles to mark out your zone. You're using the 15-minute candle close, that with a reaction, of course, and you need the candle needs to react. You don't just want to see it blast through and it close at the high with no candle. You need to see some form of a rejection, and it's that simple. It doesn't need to be complicated. You don't need 100,000 rules as to how to trade this. You're simply marking out your zone. You go into the 15-minute time frame, and when you see the wick with the reaction, you're taking the trade for 1%. There's nothing else that needs to be explained. Okay, so now when you're in the trade, I had mentioned in the presentation that Heikin-Ashi candles are going to help for your psychology. So what did I mean by that? I mean this: if you struggle with poor psychology and you're so quick to want to get out of a trade or take your profits too early, just remind yourself you're looking for 1%. So once you found your entry using your regular candlesticks, simply go to Heikin-Ashi candles once your trade is in and watch it from there, because remember, Heikin-Ashi candles are taken based off of volume and trend. So if you're seeing green candles, let's get rid of that now. If you're seeing green, a little bit of red, but green, why are you in such a hurry to close out your trade? The trend is still up, okay? So that should help tremendously with your psychology. When you take the short and then you see red, one green, red, why are you in such a hurry to close it out? If you haven't reached your 1% yet, don't be in such a hurry, okay? Just a little tip and a little advice that I could give you there. But it goes the same way. So you're using Heikin-Ashi candles to mark your zones, and after you've already entered into your trade, turn on your Heikin-Ashi candles again and just watch those Heikin-Ashi candles until you reach your 1%. Once you reach your 1%, you're done. That's it. Wipe your hands, business is finished, okay? And then look for the next trade, pretty much. So that's just something that I want to give to you guys, share with you guys, that you can throw that in your bag of tricks, your bag of trading tools, your bag of strategies, whatever you want to do with it, take it, make it your own, and good luck, okay? So I see one more here. I'll mark this out. This is demand, so I'll take this rectangle, I'll put it on the wick, I'll slide it over. I see, let me go back to the candlesticks. I see here that there's my reaction right there at the candle. I take my long, I put my stop loss below the wick. Oops. Stop loss goes below the wick, right? And what am I looking for, guys? I said it multiple times. I'm only looking for 1%, okay? And you see here, you would have had your 1%, right? So just like any other strategy, yes, this is hindsight 2020. Yes, this had to be back tested, but every single strategy needs to be back tested. Otherwise, someone wouldn't have the strategy unless they're literally gambling money away to try to figure something out in the market, which makes zero sense. So there's a high probability using this scalping strategy right here, guys. I really encourage you to start applying it on your own charts, and you'll just be blown away. Whether it's Ethereum, some altcoin, ADA, GMT, LTC, Link, I don't know, GRT, anything, the ES, the S&P, the DXY, the Euro, the Great British Pound, it doesn't matter. Apply this on anything and you'll see the power of it. it works the same in all markets. So there you go. That's it for me. That's all. Let's end this by going over the presentation one last time, which is the rules. So with this strategy, you will need a rectangle tool, Heikin-Ashi candles to mark zones, and also help to eliminate poor psychology when you're in the trade. Regular candlesticks on the 15-minute time frame to find your entry and place your stop loss. You'll need patience and discipline, and you will need the 1 hour and 4 hour time frames to identify these zones. That's it. That's all. Watch this video once, twice, 3 times until you understand. And until next time, I'm out.